Let's move on to training. Today I want to talk about indicators. Makdi, RSI, moving average.
100 hashticks, half a Bollinger, and at the end of the trend line. I will try to show the most popular things,
Which are often used in charts. Let's first understand what an indicator is. And if we talk. In simple words, an indicator is a calculation. This is not a predictor of the future. A regular indicator takes data,
which are already on the market: price, volume, time, maximum, minimum, closing price.
and then, according to some formula, they show you a line, columns, or a number. That is, roughly, the indicator is mathematics drawn on a graph. For example, not just the price itself, but the average price, or how far the price has moved from its normal range, or where the price is within the range. In the last candles, it is important that the indicator does not know the future. He doesn't know what will happen next. He takes past data and current data, counts them, and shows you the result. That's all. Often, the person thinks there is some kind of secret indicator, but almost all popular indicators have long been known. They are available for free in almost any broker. They are in trading. They are VIPs. They are in another application where you use them. Not RSI, not MCDI, not invented yesterday. Moving averages. Stochastic, palsy, Bollinger is also no secret. Yes, of course, I think that the fonts where they manage millions, billions, could have its own models, its own algorithms, its own calculations, its own analysts, but this is not. Means that somewhere there is one secret line that always says, buy here, sell here, there will definitely be growth here. That's not how the market works. And I'm not saying that the indicator bad. No, indicators can help. They can highlight movement, suggestive trend, show that the market is overbought or oversold, or that volatility has increased. But the indicator is not the brain. It's not a strategy, it's not a guarantee, it's just a tool. It's like a ruler. A ruler can help measure, but the ruler won't decide for you. It will just show the distance. Here's the indicator too. It just shows something, but you still make the decision. That's what the problem is with him. Points, they think. Now I'll find the right indicator, I'll start making money, but the market won't. Works because the indicator usually takes what is already on the chart. Price, volume, time, often. Converts it into a beautiful line. This is not a predictor of the future. This is most often derivative of the estimate. The price was already moving. The indicator worked it out and drew a line for you. That's why, if you understand price, volume, levels, and risk, then the indicator is not a salvation for you. It's just for you. We'll give another beautiful line along which you can make a mistake. Let's put it in simple words. First, popular. Simple, distorting average. It simply takes the average price over a certain period. For example, average price for 20 candles, or 50 candles, or 200 candles. If the daily chart is 200 MA, this is approximately average price over 200 trading days. The point is simple. The price is constantly being changed. Up today, down tomorrow. Bottom, then up again, then down again. The askance middle smooths out this noise, and you roughly see direction. If the price is above average, it is often said that the market is looking stronger. If the price is lower, average, weaker. If the short average crosses the long upper, bloggers often say, oh, that's a signal. If it's down, I don't move the signal. But intersection is not a guarantee. Price may stop, middle up, and then immediately return back. And it will carry you out, especially if the market is sideways. When is the price? It just wanders back and forth. The telling averages can often give a bunch of false moves and exits. Like, crossed, buy, then down, sell, then 5 up, then 5 down. There is also IMA. This exponential moving average. It sounds complicated, but the meaning is simple. IMA often reacts to latest prices. That is, the usual MA is calmer, slower, and the IMA is more fast and sensitive. If the price goes up or down sharply, the IMA will quickly follow it. That's why readers often use IMA when they want to see movement changes faster. Well, here too.
Trap. The faster the indicators react, the more false signals there may be. Because the price.
I started to think, IMA is already reacting. And you might think he started moving, but it was normal noise. Therefore, IMA or IMA is no worse or better. They're just different tools. MA is calmer, IMA is faster. And you can't just say, the price is above average, we'll buy it. No, must watch. Where is the level? Where is the volume? Where is the stop? The market is now, trending, or just counting here and there. If this is not the case, these are not strategies, these are just lines on the graph. Now Makdi. Makdi loves it very much. Show. Because it looks beautiful. 2 lines, gestogram. Intersections, beautiful, smart. Seems serious. But to put it simply, Makdi is trying to show impulse, that is, the movement is accelerating. Or weaker. Inside Makdi, 2 telling averages are usually compared. Fast and slow. That is, one reacts faster to price, the other slower. And Makdi shows the difference between them. On the plus side there is a signal line. And there is a gestogram. These are these columns. The bars help you see. The impulse increases or begins to weaken. If the bars rise, the momentum may increase. If the columns decrease, the impulse may lose strength. But again, Makdi does not know the future. He looks at what the price has already done. If the movement has already begun, Makdi can show that there is momentum. If the movement weakens, Makdi can show that momentum is being lost. He's late. You can. Seeing a beautiful intersection after a good part of the movement has passed. And the man looks. Oh, Makdi gave and gave. Buys. And the price has already gone down. And then the divorce. And such a person is a bad indicator. Not really. Maybe the indicator is normal. You just used it as a magic button. And this is not a magic button. Makdi. There is a level. There is an understandable stop. And Makdi confirms the impulse. Okay, that might be an added benefit. But if Makdi just gives a beautiful intersection, but there is no volume, there is no level, it is not clear where the stops are. And you in general. If you don't understand why you're leaving, what does this Makdi give you? A beautiful line. Thank you. But the money is beautiful. Lines are not guaranteed. Now RSA. RSA is also a very popular indicator. If in simple words RSA, show the strength of the price movement. It is trying to show the price has already risen too much or too fell. The RSA usually moves from 0 to 100. It is often explained this way. Above 70 is overbought. Nisha 30. Oversold. That is, if it is above 70, the market seems to have already accelerated strongly upward. Looks like it's below 30. Have already been pushed down a lot. And he suddenly thinks, yeah, if the RSA is above 70, then we need to sell. If below 30, which means you have to buy it. But this is a dangerous trick, because in a strong trend, RCA can take a long time. Be overbought and continue to rise. And you network against the movement and think. But when it falls, the same. The lowest RSA may be below 30. You think, oh, it's oversold, you have to buy it. And the stock is still falling. 10, 20, 30%. Why? Because it's bad news, because there's no volume, because there's a crowd. Comes out. Therefore, RSA is not a buy, it is another hint. Now 100 hastic. Usually when they say stochastic, they mean stochastic oscillator. It sounds scary, but the meaning is simpler. Bet that the price has been moving in some range over the last few candles. Was up, was bottom, and 100 hastic tries to show the price is now closer to the top of this range or closer to the bottom. If the price closer to the top, 100 hastic high. If the price is closer to the bottom, the 100 hastic is low. That is, he doesn't says definitely buy and doesn't say definitely sell. It simply shows where the price is now. Within its recent range, usually there are 2 lines, one faster, the other more smooth. And people look at their intersections. If 100 hastics are below or neither turn upward, talk about a buy signal. And if 100 hastics are at the top or neither turn down, they talk about a signal on sale. But 100 hastic can be useful when the sob is on the sides, when there is a clear corridor from below. Doesn't buy, sells from above. The price goes back and forth. This is where 100 hastic can sometimes help see that the price has reached the top or bottom of the range. But if the market is in a strong trend, 100 hastics can hang at the top or bottom for a long time. And again, there will be the same problem. Indicator says it's expensive, but the market goes even higher. Or the indicator says cheap, but the market falls even more. Below, this is why you are sitting against the trend. Why? Because you believe the indicator more than the price itself.
Bollinger Bands. Bollinger Pence. They say Bollinger Bands are becoming more frequent. This is also popular.
Thing. There is usually a middle line and two stripes at the top and down at the bottom. In simple words, these bands show how much the price has moved away from its normal movement. When the stripes shrink, the market seems to be becoming calmer. The volatility is lower, the price is in a narrower range. When the lanes are widening, which means the traffic has become sharper, volume has increased. Some people look at the price, reach the top band, which means it's expensive. The price has reached the bottom band, which means it's cheap. But here again, it's impossible. It's too easy to think. In a strong trend, the price can go along the upper border for a long time. And every time, you sell because the price has already touched the upper limit. It may be more of the same down.
The price may move along the lower border, and you will think, well, it's time to buy the bottom band, it's falling.
Further, therefore, Bollinger Bands are not a signal to definitely buy or definitely sell. They are more likely help to understand whether the market is calm or sharp. The price has compressed or expanded. Volatility rises or falls. Now the trend lines. This is no longer quite an indicator. It's more of a charting tool. You draw yourself line and trying to understand the movement. And I think this is one of the main tools which a trader or investor should at least understand, because the trend line helps see the direction. If an upward trend usually draws a line along the lower points, that is, the price is rising. Then it rolls back, then grows again. Then it rolls back again, and you connect these line pullbacks. It turns out to be an ascending line. It shows where buyers used to start. Maintain prices. If the trend is down, the line is often drawn to the top point. The price falls, bounces, falls again, bounces again, and you connect these top points. It turns out descending trend line. It shows where sellers used to push the price down, meaning simple line. Trend helps to see the direction. But here, too, there is no need to do any magic. Line can be drawn differently. One trader will do this, another a little higher, another a little lower, and everyone will think that they are right. Therefore, the trend line is not a concrete wall, it is an apartment. If the price is many times, I touched this line, bounced off it, volume appeared there. Then this place gets interesting. They're already. You can see whether there will be a rebound, whether there will be a breakdown, whether a buyer will appear or the seller will continue. Press the price. But if you just draw a line where you hit it, it doesn't mean anything. And the breakdown line. Trend also does not always mean all reversals. And it was necessary to punch the line, then return back.
And everyone who hurried was simply carried away. Line from the trend helps to understand the direction, no matter the entrance.
There must be a plan. Where is the level? Where is the volume? Where is the stop? Where will I be wrong? If this is not the case, a trend line in itself is also not a strategy. And now the main question is, why then these? Do bloggers show indie footage so often? Because they are easy to show. Open the chart, put Makdi.
I put an RSI, put 2 lines, drew a trend line, and everything looks smart. You could say right here, there was a signal, here it was necessary to buy, here it would be necessary to sell. This is especially true in history. Beautiful. Because when the schedule has already passed, you can always find a place where an indie shot can work. Right here. Makdi crossed. Here the RSI left the zone. Here the average supported. Here the trend line.
I held it. And it seems, well, everything, the strategy is ready. But the problem is that in real time you don't. You know what candle will be next. Everything is clear in history, but not in the moment. And this confidence is often. They sell subscriptions. They show the previous graph, where everything is perfect, where the arrows hit perfectly, where the indie footage showed perfectly, and then they said, if you want such inputs, subscribe. And here, you have to use your head. And if it were all so simple, why sell a subscription? What are we just? Don't push buttons and print money? I'm not saying that subscriptions are bad. No, maybe. Normal for Lytic, maybe a normal explanation. Maybe the person is really showing. Logic, risk, mistakes, stops. Where he was wrong. That's one thing. But if they sell you an idea here. Secret indie footage that always shows the entrance. I would immediately be careful that because the market. That's not how it works. For me, this is the normal order. First price, then volume, trend, level, risk, and then only indie shots, and not vice versa. Not so. RSS said, I bought it, but there is movement, there is volume. There is a level, there is a clear stop. Indie shots don't argue ideas, then indie shots can be
An additional hint, but not the main brain of the deal, and it is important that the more indie frames you bet
on the schedule, so you don't become to me. Sometimes it's the other way around. Makdi says, Bave, RSS.
Says, a little cautious. Stochastic says, sell. Average says, sideways, stripes.
Bollingers say, prestige. The trend line seems to be holding, and you're sitting there like that. And what to do? But nothing. You just filled up the chart. You can't even see the line with them. Now the price itself. Forever it will often turn out that the more indie shots, the more professional, but the more professional it is. When it's simpler, price, volume, level, trend, risk, and maybe 1 or 2 indie frames, if they really help. There are 10 of them to make it beautiful, and what kind of indie frame will be placed? For him to tell me to buy, this is the way of subscription, course, and disappointment, because you give responsibility, the line is on the screen, the responsibility is still on you if you